right, so we're gonna do this activity and we're pretty much gonna be playing the game of life. This activity is called expectation versus reality. So let's go ahead and do this. I'm gonna help you with the first page and then you are in charge of the rest of the stuff. So let's assume that after graduation, you get a job that pays you $20 an hour. You work 40 hours a week, you get paid once a month, okay? So, we can see that $20 is not that bad. And we're also assuming that there's no overtime, so that's okay. So let's go ahead and calculate how much we make per year. So let's calculate our gross income. All right, and again, our gross income is what we make in a whole year before taxes. So, okay, so that's gonna be $20 an hour. You work 40 hours a week, and based on what the calculations that we made yesterday, they are 52 weeks in a year. So we make a total of $41,600. I make sure that you guys are writing this as well. So that is going to be our gross income. That is how much we make before taxes. All right. Now, I didn't talk about the standard deduction. We're going to talk about it right now. So in order for us to calculate our taxable income, we need to deduct the standard deduction. So what is a standard deduction? And what I'm talking about is this little piece right here. So the standard deduction, that is the amount that the government decided that they're not going to charge you taxes on, which is great, right? So the first $12,000 you make, they're not going to charge you taxes on. So beautiful. So let's go ahead and calculate our taxable income. So that is going to be $41,600, which is your gross income, minus $12,550, which is your standard deduction. So that leaves us with $29,650. So that is our taxable income. So they're only going to charge us taxes on those $29,000. The rest of it, it's free of tax. We love that. Right? So now that we know our taxable income, we need to deduct our taxes. And we're going to do that by using this. We're going to use this tax bracket. So what this tax bracket tells you is, and this is where a lot of people get confused. So I'm going to give you a quick example. So let's just say somebody makes about $80,000, which puts that person on the 22 tax rate. What a lot of people think is that because you make $80,000, 22% of your paycheck gets taxed. And that is incorrect. This is how it works. So the first $9,875 gets taxed at 10% and 10% only. Okay. The amount over 9,876 up to 40,125 gets taxed at 12%. All right. So that is about 30,249. All right. So only the leftover gets taxed at 12%. Now, anything over 40,000 and between 85,000 gets taxed at 28% or 22%. So that is about 45,399. And then anything over 85% up to 163, 85,000 up to 163 gets taxed at 24%, which is about 77,774. So if this doesn't make sense, I'm going to go over it on Monday. But again, not the whole amount gets taxed at that tax rate, only certain amounts. So let's go over our example. So our taxable income is $29,050. So what I'm going to do is I am going to break that amount into the smaller pieces. So the first $9,875 are going to get taxed at 10%. So that is 9,875 out of my 29,000. Well, how much do I have left over? Well, that is 29,050 minus 9,875, which is $19,000. So that's going to be located on the next tax rate, which is 19,175. And I don't go into the next tax break because that's all the money I have. So I'm going to stop right there. So that means that the first $9,000 is going to be taxed at 10%. So what is that going to be? Well, the first, so 10% of 9,875 is $987.50. Cool. All right. Now, the 19,000 that is left over of my check is going to be taxed at 12%. So that's going to be 19,175 times 0.12. And that is $2,301. And that's all the amount that I have. So that means that the total amount of taxes that I'm going to pay in a year is going to be $3,288.50. So that's how much taxes I'm going to pay on the $29,000 that of my taxable income. So now that I know that, I need to calculate my monthly pay. Well, how do we do that? Well, let's get our gross income back. So our gross income was $41,600. And I am going to deduct the amount of taxes that I'm going to pay in a year, which is $3,288.50. So that's going to be 41,600 minus 3,288.5. So I am left over with 38,311.5. So that means that out of the $41,000 that I made of my gross income, I'm only going to see $38,000 because the rest of it is going for taxes. So that is how much I'm going to make a year after taxes. Well, how much I'm gonna make in a month? That's important for our budget. So that's going to be $38,000 divided by 12, which gives us 3,192 with 62 cents. So I'm going to be making about $3,000 per month. All right. And we got to keep that amount in our head because that is the amount that is going to determine everything that we're going to be able to afford later on. All right. So that's our monthly budget, $3,192.62. If you did not get the tax bracket, I'm going to go over it on Monday. So don't freak out. Just, pay attention to those quantities, more specifically the $3,000 one. So now your assignment is on the second page. You're going to create yourself a budget. You can answer those questions. And you're also going to pick an amount for you to save. All right. Once you pick that amount for savings, you're going to go ahead and pick a retirement account. And you're going to calculate how much money you're going to have when you retire. So assuming that you're 19 years old and you're going to retire at the age of 60. So pick an account, see which one gives you the most, and answer the questions. And also all the formulas that you need are there. On the next page, you're going to see if you can afford to buy a car. Now, obviously, we had a conversation about buying a car from a dealership. We got to pay cash. Let's just assume that we're going to go get a loan. And this is just for the sake of the activity. Okay. So I know, forget everything that I taught you yesterday. We're going to go buy a car. Pick the lender, answer the questions. And again, all the formulas are there. Now, number 4, you're going to see if you can afford to buy a house. So again, look at the formulas that you need, make the calculations, and see if you can afford to pay for a house given your monthly budget. And at the end, just kind of answer those questions. Now, what I am going to say is, please look at your notes, because yesterday we were using some formulas that we were not supposed to be using formulas. So remember that there's 3 formulas that we know now. So we have exponential models, which is y is equal to a1 plus r to the power of t, or exponential decay, which is a1 minus r to the power of t. So we use those models for something that is growing, such as population, or something that is decaying, such as your car, which decays in value. We also have the exponential compound models, and that is specifically when it comes to investing money. So that is y is equal to, or I don't know if it's y, I think it's a p1 plus r over n to the power of tn. And we know the exponential continuously compounded, which is a is equal to p times e to the power of rt. And finally, I am also giving you the simple interest, and I specifically told you which examples are going to be using the simple interest. So if there's an example that does not say that I'm going to be using simple interest, then you gotta figure out which one of those 3 models is. If it tells you that it's simple interest, you're going to be using a is equal to what is it? I don't know, I think it's p1 plus rt. Okay, and that model, the simple interest, is specifically going to be for getting a car loan and a mortgage loan. Okay, so not all the examples are going to be using simple interest. And I specifically point out that it's simple interest. The ones that don't say that, make sure that, again, you decide which one of those 3 models you're going to be using. So other than that, that is your assignment for the rest of the day. This needs to be done by Monday. Okay, I'm going to use this as a project grade or a project assessment base. So this needs to be done. We're going to talk about it on Monday. So please make sure that you finish it. Today should not be a free day. Stay focused, work with each other, and just get it done. All right.